right. Hello. Happy Saturday. Happy Saturday, Instagram. Happy Saturday, Facebook and YouTube. So I'm here and Instagram. I'm going to be here for a minute. If Instagram does not send out my message, then I am going to be removing this live stream. And I ask that everyone comes over to YouTube. So welcome. Happy Saturday, y'all. I know it's been a minute, stuff was going on, but it's all good. I'm here now when it comes to doing this new series that I have. And I'm speaking specifically to my traders, those of you on Facebook, YouTube, and of course, those of you on Instagram. So as you all come in, please do me a favor. You know the drill. Let me know where you're tuning in from. Drop your city, drop your state, drop your country, okay, where you're tuning in from. And also don't hesitate, y'all, to hit that subscribe button on YouTube if you have not done so yet. And also hit that notification bell if you have not done that as well, because I will be going live each week, providing another part to this series that I am producing today, or creating, not creating, bring it to you today. Jeez, my brain is like all over the place. It's been very busy today. So my apologies, y'all, but I'm here. So hit that notification bell, most definitely. Make sure that you share the video. Share. There are people out here that are curious about trading, that have been kind of like in a rut, feeling stuck and whatnot with trading so far this year. They may have had a really rough trading year, and they're second guessing their ability and whatnot. Trust me, this is one of those live streams that you may want to share with them, because it may be something that is said that triggers for them, and it's just jump starting them back into it. Whether that's learning with me or not, it doesn't matter. I just want people to not give up on something that they said is for them. So welcome from ATL. Gotcha. I appreciate it. Love to see it. Let me cut this off because Instagram still, I don't know what it is with this particular page, my Prosperity Calls page. Not YouTube, but Instagram does not work for whatever reason. So I don't know what it is, but we're gonna keep it moving. So there we go. All right, so we're gonna keep it moving. So today, what we're gonna be talking about is a new series that I've created, because there are a lot of people that I've talked to that are part of my email community. They've never really learned with me, but they've had some bad experiences with trading. I did a series recently, last month actually. It was a trading trauma series. So there were 4 parts to that. If you have experienced any form of trading trauma, please tune into that first, and then come back and watch this, okay? Because this is what's going to help you to pretty much start over. You know, a lot of us have experienced things in trading that we weren't really like, I don't know if this will be, and some of you may have thrown in the towel if you're watching this either live or the replay. Some of you may have thrown in the towel and you're kind of still feeling a little tug, but you're just really not sure. This series is going to help you with building on what we talked about in the Trading Trauma series, okay? And that was a 4-part series. You can go back and check that out from last month. So before we get into everything that we're going to talk about today, I want to first do this disclaimer, y'all. And then, of course, for those of you that are not familiar with me, then I most definitely, give you a little background on me. So remember, y'all, with trading, this is a very high risk type of investment. Okay, you do not want to come into this lightly. So just keep in mind, excuse me, that with trading, there is a higher risk of loss, of course, and that's due to various market conditions, economic events, plus there's a combination of, your level of emotional intelligence, because that really does play a role in your success or failure in trading, and also your risk management plan, among other things, okay? Y'all, I am not going to be advising anyone to do anything, okay, at all. All I'm doing is sharing with you all some of my experiences, some of the things that did not work for me, but also some of the things that have worked for me. I'm going to share some strategies, some information, and it will be on you as an individual to take that information, do your own additional research, see what works for you, if anything works for you, and then decide how you're going to move forward in the market. Because again, past profits do not guarantee any type of results for you, because each of us as individuals learn differently, and we also perform differently with the same information, okay? So I could read something today and I could take something totally different from what I just read than what you read. And we both read the same book, the same page, the same chapter, all of that good stuff. Okay. So again, everybody learns different. Everybody performs differently. That is why it is suggested that you really just consider every single risk that is associated with trading before you decide to enter this market, okay? And on top of that, y'all, please only invest money that you can afford to lose, and it's not going to impact your lifestyle in any way. I don't want to hear anyone saying, yo, like, man, I lost all of my money. I lost $10,000 and I couldn't afford to lose that. Do not, I don't care what market it is, whether you're investing, whether you're trading. Do not, y'all, please do not put more money into any market than you can afford to lose, okay? If it's your Starbucks money, put your Starbucks money in the market. If it's your whatever your vice is, put that into the market, not anything that you really need to pay your light bill, rent, mortgage, whatever it may be. Okay. So now, bam, we got all that out of the way. We good. All right, we're good. So for those of you that are new to me, first of all, welcome. I appreciate you for coming. Those of you that are not new to me, again, welcome. I appreciate you for coming, especially on a Saturday, because I'm pretty sure it's real sunny here in Texas. So you could be doing anything, and you're here today. So I appreciate you. Okay. So just a little bit about me for those of you that are new and have not been exposed to me yet. This is your first time hearing my voice or seeing me. My name is Leona Clark. I currently reside in Texas, like I just said. I'm an Army veteran. I did 20 years active duty in the Army. And while I was in the Army, this is when I was actually introduced to trading. So I was introduced to cryptocurrency trading first. That didn't work out because there was no real education. It was just, you should be trading, open up these accounts, and then go at it. Like there was no education, there was no foundation, no nothing. So needless to say, I just sat it down. But then in 2018, I was introduced to Forex trading, which is the foreign exchange market. And so I was introduced to that. It was pretty cool. I could really see myself doing it. But at the time, being a first sergeant, having hundreds of people that I had to account for and lead and whatnot, it was just a lot for me. So I did sit trading down for a while. I did a little bit here and there between 2018 and 2020, but I wasn't as engaged, to be honest. And I lost some money. I lost some money because in my mind, I was just like, I'm gonna get this fans, you know what I'm saying? Because I'm smart and yada, yada, yada. I'll get into that later. But so I lost some money, but I set it down honestly because I was just really busy. My schedule, I wasn't really good with scheduling stuff. It was just too much going on. So I picked it back up in 2020. And from 2020 to now, of course, that has been 100% focused on trading, learning all over again. So what I'm sharing with you all today is what I did when I got back to the table of trading in 2020. I started from scratch. And then that's when I started to see consistent profit, figuring out what I liked, what I didn't like, overcoming trading trauma. That took almost 4 years of working through. And then that's when I became consistent to the point where now I feel very comfortable with teaching people because I've made the money and I'm helping other people to do the same thing. Okay. So that's just a little bit about me, but I want to tell you all the whole point of this series, series talking about, your Forex success blueprint and whatnot. I want every single one of us, because I still trade, I want every single one of us to trade smarter in 2025. So sometimes you may need to just start from scratch like I did, okay? And this is going to be one of those ways to do that, because today I'm going to talk about, like basic concepts of Forex trading and whatnot. I'm going to talk a bit about time management and sprinkle in some risk management. But part 2 is when I'm going to really dive into like some technical analysis, and that term may go over your head right now, but trust me, if you tune in, you'll get it. Those terms won't be foreign to you. They won't fly over your head. It'll make perfect sense. We'll also touch on risk management. And I'm going to tell you, risk management was something that I wish people would have broken down the way that I am going and intending to break it down to you all, and also how I teach people, okay, that are students of mine. And then also we're going to talk about, just long-term success in trading, like how do we get that? And then also give you a couple of tips and strategies, right, to build your own sustainable trading plan, okay? So, and then there's going to be more things that's going to be discussed over these next few weeks. But I just want to make sure that you, as a newbie, you get the information, right? The goal for you is to just progressively introduce these Forex concepts to you while also helping you to manage your time effectively. So if you're like, Leona, yes, I've been having so much going on and time management has been a huge problem for me. Trust me, you are not alone. All of us have life happening, okay? All of us have family, have businesses, have jobs, have all kind of things. And then factor in the point that you need to take care of yourself. So you got to factor in and put into your schedule self-care, right? There's a lot going on. All of us are experiencing it. And what I want to do is share some of the things that I wish I would have done earlier, but I do now that are very, very helpful. Okay. So with that, I want to make sure everyone is aware this series again is pretty much tailored to, those individuals, if you're new to trading, but also people who have, really busy schedules that trade or not really trade that much, but want to trade more. You have a lot of family commitments. And of course, you have limited daily study time. Okay. So is it all right if I could just give y'all a quick story, get some little story time in before we get into what you're going to learn today? Let me know if it's okay, if we could do a little story time real quick. It ain't going to take long, y'all. I'm just going to be on here for a minute. Okay. With this. All right. Okay. So cool. So let's run it. Okay. So here's the thing. So like I said, I started telling you, but I was like, I don't want to get into that too much. So I started trading, like I said, while I was in the Army. I was active duty at the time. And I think I was an E7 at the time. So Sergeant First Class in the Army. And so I was an E7 at the time. And I was introduced to crypto first. So the first thing was, my husband had this guy that was part of, that worked at his job. He's in the Army as well, about to retire. Yay, husband. So he was at a job and he was telling him that he trades crypto and, my husband should be trading crypto, so on and so forth. And so my husband brought it to me. Now, I'm going to tell y'all something about me. I am a risk taker. I have been that way my entire life. I'm one of those people. I will test something out. If I like it, great. If I don't like it, it's all good. At least I can say I did it. It wasn't for me. As long as it's not something that I know is extremely, risking my life, like it's going to risk my life or anything along those lines, like, something that's immoral, unethical, where I would honestly regret, doing and whatnot. So for the most part, though, I'm a risk taker. I definitely test something out. So my husband brought it to me. I was like, sound cool. I see how that goes. Yeah, when I say like this guy, God bless his heart, like the good thing was he introduced us to something that we weren't even aware was available. That's number one. So I'm not knocking that. But it was just, for me, it was the introduction, the way it was done. It was more so like, yeah, you should be trading crypto. And I forgot how much he said he made, whatever the amount was. Yeah, I made such amount of dollars. And, all you got to do is this. So this is what he told us to do. Yeah, he told us to just open up a Coinbase account, which I did. And then he said, open up a Binance account. And you're going to trade within your Binance account. You're going to trade the different cryptocurrencies. So you're going to take the crypto that you purchased, Bitcoin specifically, because we had to purchase Bitcoin, nothing else, right? He said, purchase your Bitcoin in Coinbase. He didn't walk us through how to do it. None of that. So again, y'all, when I'm sharing stuff with y'all, it's because the way that I share with you is because I wish people would have done that for me. So anyway, so he was like, yep, open up your Binance account, and then you're going to transfer your Bitcoin from Coinbase to Binance, and you're going to trade in there. So I'm like, okay, like that's it. Like, but what is cryptocurrency? Like I just didn't understand. So me being me, I started Googling. I mean, that's the only thing I knew to do was just Google, like, what exactly is cryptocurrency? Like, how are you supposed to trade? Like, how do I buy Bitcoin on Coinbase? Because I didn't even know. I've never seen Coinbase before. I didn't even know what Coinbase was. I had never seen Binance before. I never knew what Binance was. So I'm on YouTube and I'm Googling how to purchase Bitcoin and then also how to transfer it to Binance and all kind of stuff or whatever. So eventually, we figure it out. we're in here trading, you know, Ripple, XRP, my bad, XRP. I think I had Man at the time, and what else did I have at the time? So it was XRP, Mana. There was something else. It was a bunch of stuff. I ain't gonna lie. So anyway, so I'm in here calling myself trading, y'all. And I just got tired. I was like, look, I'm having to do all of this research because I have no idea what I'm doing. How many of you have sat here and had someone introduce something to you and they tell you part of the information and then you're stuck like, well, okay, so what do I do next? Right? That's what happened. And so needless to say, long story short, I set it down, y'all. I was like, I'm not going to do this. I'm not doing it. I'm done. So I moved on. And then eventually I was introduced to Forex trading. And that's the foreign exchange market. So our different currencies, the US dollar, the euro, the pound, the yen, you know, Canadian dollar, so on and so forth. That's part of the foreign exchange market. So I got introduced to that. That one I was more interested in faster, I would say, because there was training, there was lessons associated with it. The only issue for me at that time, well, there was two issues. One was the people that introduced me to it. God bless them. You know what I'm saying? They didn't really appear to like know how to trade. Like initially when I learned, you know, or got exposed to it, it sounded like they knew what they were doing. But as I asked questions, because I'm very inquisitive and I want to know, where do I go for this? Where do I go for that? Why do we do this? Why do we do that? You know, as I'm asking questions, people can't answer my questions. And I'm like, but y'all trade though. So not only that, but also the time. Like it was a really rough time for me. I had a lot going on as a first sergeant in the Army. And so it was just really busy. And I just said, you know what, let me just sit it down for now and I'll come back to it. So eventually, in between 2018 and 2020, I did trade here and there on my own. I joined this little small trading group. I'm not going to get into that because that would take longer for me to explain it. But because of that, you know, 2020 is when I decided, okay, let me pick this back up because I'm going to retire. I don't want to work a job. And I feel like I could be really, really great at trading. Like I really think that I could be great at trading. And it just never left me. And so I'm saying all that to say from 2020 to now, that has been my main focus. Like I love trading. It's because I'm an introvert. I don't have to do anything with anyone. I could just sit on my computer. I can have my phone and I could just look at the charts. I can mark up and I can play my music in the background and do me. That's what I love about trading. And so ever since 2020, until now, I have been able to trade, take my time, do my own thing, make my money, spend time with my family, and also now teach other people what I have experienced, the ups, the downs, the good, the bad, the indifferent that comes with trading. And so prayerfully, as we go through everything today and the upcoming weeks, you see that trading isn't going to be as easy as you think, but it is rewarding. And if you stick with it, you can start to see the results that you desire to see as a trader. Okay. So that was it for me. At this point, I'm full in. There's no turning back and doing anything else. I'm unemployable, y'all. I don't want a job. I have no desire to have a job. Not knocking anyone that has it, but I just love the freedom that comes with trading and just being able to sit down and I can look at the charts at whatever time of day I desire to do that. Okay. So that's it. Let's get to why we're here. Okay. Today, you are going to learn in this session, like I shared earlier, some of the basic concepts and ideas of Forex trading, right? And then I'm going to also share some practical time management techniques for balancing learning, trading, and of course, your personal life, because that is very key. Like I shared with you, you know, when I got introduced to Forex trading back in 2018, it was the timing for me. My scheduling, I just couldn't figure it out. That was on me, not anyone else. And so that's the reason why I really feel like this needs to be in the forefront before anyone puts any money into learning, before anyone, you know, puts any money into any live broker accounts and stuff. You have to know if you right now is the right time for you to trade based off of what your day-to-day looks like. Okay. And then also how you're feeling mentally and emotionally. All right. So let's get into it. What is Forex? If you are still with me, let me know. Say, I'm here, Leon. Type, I'm here in the comments. If you are still with me, I'm sorry, but I'm sharing screens and whatnot. So I can't really see. And sometimes Facebook doesn't show the comments. So I don't know what's up with that. I don't know if I have to do something special with StreamYard, but whatever. So we're going to keep it going though. What is Forex? So for those of you that are unfamiliar, Forex, which is short, okay, for foreign exchange, this market is one of the largest foreign financial markets in the world. It is actually the largest financial market in the world. We are able to trade 24 hours a day, 5.5 days a week. And you're talking about $7 trillion being circulated. Y'all, $7 trillion. Listen, you get 100 of that $7 trillion in a day. And this is every single day, y'all, that's being circulated. You get 100 of that $7 trillion in a day. Do you think that that's going to hinder someone else from making 1,000, 10,000, 100K, 1 million, whatever? Do you feel like that's going to hinder anyone from making their money? The answer is no. So this is what I love about the foreign exchange market as well, because no matter what I do, no matter how much I make, it's not going to hinder you from making your money, right? Now, I do want to make a note. I'm not going to dive into this too much today, most definitely, or even during this series, but cryptocurrencies can be traded within the foreign Forex market realm, right, with our Forex brokers. And depending on what Forex broker you have, you know, of course, you can trade it, and that is 24/7. So today, I actually was supposed to look at the market, but I got busy. But I'm going to look at the market again later, the cryptocurrency market again later, because I do attempt to trade cryptocurrency on the weekend, right, as long as the setups are there. So that is Forex. Now, I want us to touch on, you know, the decentralized nature of Forex, and of course, the different ways that you as an individual can trade these different currencies. So if you've never heard of this term before, like I hadn't when I first started out, of course, I'm going to break it down. So the decentralized nature of Forex just simply means there is no central exchange or physical location where all currency trades take place. So it's not like I have to go only to Bank of America to trade in the foreign exchange market. Bank of America is not the central focal point where all transactions happen. No. Okay. Instead, Forex just operates through like a global network of banks, financial institutions, you know, brokers, and of course, traders like myself who interact electronically over the counter. So you may see OTC. Okay. That's what that means, over the counter. So this makes Forex a 24-hour market that is open 5 days, 5.5 days a week across various time zones. Now, there are different individuals that trade these currencies, right? So I'm going to, let me rephrase that. So we as individual traders, we can trade currencies in several different ways. That's a better way for me to say it. All right. So here's the thing. We have number one is the spot market. So you may hear that, you may have seen that, especially like Bloomberg and whatnot. So this is the most common way where currencies are traded for delivery, for immediate delivery at current market prices. That means immediately, right? Then you probably have heard of Forex futures. These are contracts. Okay, so you may hear people talking about, yeah, they trade futures now. They're doing contracts to buy or sell currencies at a future date on price, and that's typically traded on exchanges. So of course you can do your futures trading on different platforms. You would have to do your research on that. I'm not going to dive into those things right now because I want to stick to just real quick basics. Okay. Then you also have Forex options. All right. Now this gives traders the right, but not the obligation. Okay. But gives them the right to buy or sell currencies at a specific price before a certain date. So you may hear stock options, you have Forex options, okay? And then number 4, we have Forex CFDs. These are contracts for difference. So traders speculate on currency price movements without owning the actual currency. I want to say this just in general, Forex trading does not mean that we own any currencies. We do not own, if I were to trade euro paired with the US dollar, I don't own any euro. I am just trading euro USD. Okay. I do not own anything as a trader. All right. So I want to make sure I'm very clear on that. And then lastly, number five is trading Forex via brokers. So most retail traders like myself across the market, we would do this through our brokers, and this provides us a platform to trade these currencies. And that's often combined with something called leverage that you're going to learn about a bit later. So if you are like, what is leverage, Leona? Write that word down right now, because I'm going to talk about it a bit later here in this live stream, right? So those are the 5 ways that us as individuals can trade currencies. And moving forward, y'all, you're going to find which one is most likely going to be for you. But again, additional research on everything is going to be paramount. Okay. I need y'all to keep that in mind. So keep in mind too, that this decentralized and flexible system allows traders to participate in the market from anywhere at any time. All right. Everybody got it? If you got it, let me know. Say, I got it, Leona. It's making sense, Leona. You have 5 different ways that you could participate in the foreign exchange market. Okay. Great. So now, this is something that I didn't really understand when I first started, but I would hear people talk about, oh man, you know, they over here messing with the market. And I'm like, who is they? Anybody else thought that in the beginning when you were trading, or even right now? You may have heard people talking about different things in the market, like, well, who moves the market? I'm going to share with you who moves the market. So I'm going to give you some of the key participants in the foreign exchange market. All right. If you are ready to take notes, go ahead, put down the number 1, because I'm going to give you the first one. There's going to be 4 different people or entities that can impact the market, or participants in the market. Okay, so these participants are central banks. That's number 1. They are financial institutions. That's number 2. They are corporations. That's number 3. And then there are people like me, retail traders. That's number 4. Okay, so our key participants in the foreign exchange market, again, number 1 is our central banks. Number 2 is our financial institutions. Number 3 is our corporations. And number 4 is retail traders. Okay, now I want to clarify the role of each participant in the global currency market, because we all need to understand that how they move the market, how do they participate in the market, so that way when you do start to trade, or when you see something happening in the news and then there's certain movement, you can put 2 and 2 together quicker, because you understand who is participating in the market. Okay, so let's break each one of these down. Okay, so number 1 is our central banks. So central banks are the primary regulators of any country's currency. Okay, every country has their own. They manage monetary policy. They control interest rates. Okay, and sometimes intervene in the forex market to stabilize their country's currency value. Right, their decisions, such as adjusting interest rates or using foreign reserves to buy and sell currencies, can significantly impact currency values and global trades. I'm going to give you an example. Those of you that have been trading, and you know, you're going to be like, absolutely right. Here in the United States, we have the Federal Reserve. The Federal Reserve can like raise interest rates to control inflation. And this also, you know, can strengthen the US dollar, okay, by making it more attractive to investors. Well, when you see or hear that Jerome Powell is about to speak, what typically happens? Investors, traders, we tune in because we want to see what he's going, we want to hear what he's going to say. And then if we aren't trading the news, right, we're waiting for the news, you know, everybody to die down and whatnot, everything to die down. We want to see how the market reacts to whatever he says. Okay. This is when you know that, okay, so if the interest rates, just throwing some out, so let's say the interest rates are lowered. Okay. So that means, okay, that's good. So now the value of, let's say, gold starts to go down because the dollar is strengthened. People are believing anymore, and they're not going to be investing as heavily into gold. They may start to invest more or put more money into other things like the real estate market. Okay, so that's number one. Central banks play a huge role in the foreign exchange market. If you got it, let me know. Say, I got it. Type, I got it in the comments. If you got it, say, I got it, Leona. Okay, all right, because we're going to keep it moving because I'm already over my time. So number two, I'm trying to keep it short, y'all. So number two is our financial institutions. So this is the thing, large banks, investment firms, they play a major role in providing liquidity to the Forex market. So they trade currencies in large volumes for a variety of reasons. You know, it could be speculative trading. It could be, you know, facilitating a client's transaction or client's transactions, you know, or just hedging against, you know, market risk. So they pretty much act as, you know, these intermediaries for smaller financial institutions, and of course, real retail brokers. Boy, I don't know what's up with me right now. And retail brokers, okay? So I'm going to give you an example here in the United States. Of course, we have like Goldman Sachs. But let's think about outside of the United States. For my people that are in Europe, you have Deutsche Bank, right? So Deutsche Bank might buy and sell currencies in huge amounts to provide liquidity for its corporate clients, you know, moving large sums of money across borders or facilitating international trade, things of that nature. So again, that's the second one. So we have our central banks like the Federal Reserve, okay, here in the United States. The second one is our financial institutions like Deutsche Bank, okay? And then number three, we're going into corporations, y'all. If you're still with me, stay with me, all right? Just keep liking the video, of course. If you're on Facebook, hit the like, hit the hearts or whatever. If you have not done so on YouTube, make sure you hit the thumbs up if this is making sense, if you like it. And also, y'all, share, because I'm pretty sure there's someone that you know that is trading and they don't even understand who participates in the market and how their participation impacts the market. Okay. So number three, corporations. Let's get into it. So multinational companies use the Forex market to manage like foreign currency risk, particularly when they have like revenues or expenses in different currencies. So by using Forex instruments like forwards, options, right, corporations can lock in favorable exchange rates and protect their profits from exchange rate fluctuations. Again, I know we have, you know, Apple here in the United States. That's like a really big one, okay? But I want to use something else like Toyota. Toyota is a Japanese company. So they may hedge currency exposures by locking in specific exchange rates when converting, let's say, U.S. sales revenues in U.S. dollars back to the Japanese yen. So they're reducing the risk of currency value changes. All right. So again, corporations also participate in the foreign exchange market. Y'all, a good place to go and see who is doing what, who is selling what, who is buying what, as far as especially like your financial institutions and corporations and stuff. Y'all, you can go to cftc.com. That is our currency. Oh my gosh, hold on, give me a second. It is our currency foreign. Give me a second. I'm trying to remember. CFTC. Lord help me. Gosh, it's escaping me right now. I hate when that happens. It's gonna come back to me. But anyway, okay. Commodities, futures, trading, commission. I don't know why I just had a blind moment. Okay, so commodities, futures, trading, commissions. But you can go to CFTC.com and there is an area that you got to play around on the website, y'all. but there's an area where it breaks down what is being traded, like as far as what is being sold, what is being bought, especially with your currencies. Okay, so that's just something to think about. If you're really curious, you want to go down a rabbit hole like I do, by all means, go out there, knock it out. Okay, so number 3 was, again, our corporations. Number 4 is retail traders. So these are individual traders. If I trade, I am a retail trader. You trade, you're a retail trader, okay? Because you're not attached to a corporation. You're not attached to a financial institution. And of course, you're not attached to central banks, okay? So retail traders are just individuals who participate in the Forex market for speculation or investment purposes, okay? So us as retail traders, we use brokers to access the market and aim to profit from fluctuations in currency prices. So as the market goes up, we can make money, but also as the market goes down, we can make money. So although, retail traders trading volumes are smaller than those of these institutions, retail traders collectively add significant liquidity to the market. Okay, so just think about this. A retail trader might speculate on the value of Euro USD. So buying when they expect the Euro to strengthen against the US dollar, and selling when they anticipate a decline. Okay, so there's something that I'm going to talk about here in a little bit, but there's a website that you can go to look at the strength of each currency. And that can kind of give you an idea give you an idea of, should you be looking for a specific currency pair to be buying at the moment or to be selling at the moment. Okay, so y'all, each of these participants pretty much contribute to the market's liquidity and, of course, volatility. If those words are going over your head, do me a favor, write them down. Write down liquidity, because you're going to hear that a lot as a trader. Write down volatility, because you're going to hear that a lot as a trader. Go and Google it, y'all, because I have way more to do, and I can't break down and define every single word and every term that is used. Okay, so I'm sorry. I would love to, but this isn't a course, so I can't break down every single word. All right, this is for free, so that means you got some more homework to do on top of what I'm going to give you later. So write down liquidity, Google that. Okay, find out the definition of that as it pertains to Forex. Okay, and the same thing with volatility. Okay, VOLATIT, VOLATILITY. There we go. I had to say that slow. Okay, but each one influence differs, which you all know now. So central banks, financial institutions typically have the greatest impact on currency movements, while corporations and retail traders contribute to like day-to-day market activity. Okay, so hopefully this gives you a greater understanding of who moves the market and how they move the market. Okay, so if that made sense, give me a thumbs up. Say yes, Leona. That made sense. Whatever you want to do, you can give the emoji thumbs up, or you can say yes, Leona. That made sense. All right, so we're gonna keep this moving, y'all, because I don't have as much time as I thought I would. So let's move on. We're gonna get into specifically what you can trade in the Forex market. Okay, so for time's sake, I'm just gonna stick to one part of the Forex market, because I know it's the weekend, y'all. I want to prepare you for a new trading week that starts tomorrow, Sunday at 6 p.m. Eastern Standard Time. That's when the market opens back up, but I don't want to take up all of your Saturday. All right, so let's get into currency pairs that we can trade in the Forex market. So currency pairs that we can trade are our major pairs. So when you hear this, I need you to write that down. When you hear this said on other YouTube channels and stuff, you will understand what are major pairs. Major pairs are those that are most commonly traded. So pretty much I won't say anything, majority of it is paired with the US dollar. That's number one. That's part of it. Okay. But it's also countries that have a bit of liquidity, so like your euro. Okay. So that's a currency that is commonly utilized. It's commonly traded. When you're talking about traveling, by people who travel across the world, you understand. The euro is really used a lot, okay? And it's constantly exchanged, all right? The pound is really used and constantly exchanged, all right? You have like your Swiss franc. That is something that is bought as an investment as well as commonly traded. All right, so those things paired with the US dollar is fit in the yen as well, Australian dollar, New Zealand dollar, those are part of our major pairs. So if you want to get a list of major pairs, I want you to Google major currency pairs in Forex. Write that down. If you don't want to pay for a Forex course right now, whether it's, you know, a small amount of money, large amount of money, y'all just write that down. What are the major currency pairs in Forex? You can use ChatGPT, y'all. Okay, you can use Google, whichever one you want to do. ChatGPT is free for the most part. So Google, go on ChatGPT. What are the major currency pairs in the Forex market? It will give you the answer. Okay, so write that down. Major currency pairs in the Forex market if you want to know what they are. Now we're going to go into minor and exotic pairs. All right, I have to go a little bit faster, y'all, because of time. So please, you know, if you're with me, just let me know. When I'm asking, just give me the thumbs up or say I'm with you, Leon, okay? So our minor currency pairs are currency pairs that do not include the US dollar, but involve other major currencies such as like the euro, the pound, or let's say the yen, okay? Or even the franc, Swiss franc. Okay, so a couple of examples is like, you know, Euro GBP, GBP JPY, AUD CHF. Like those are our minors. Okay, now these minor currency pairs do have less liquidity in a sense and wider spreads than our majors, but still see significant trading volume because they involve strong economies. Okay, so this is not to say you shouldn't trade them at all. I'm gonna give you an order, but I'm just saying this is how you'll know, you know, this is why it's moving the way it's moving, because it's a minor currency pair. Okay, so minor currency pair, go to ChatGPT, go to Google and type in what are considered to be minor currency pairs in the Forex market. That can be another piece of your homework, okay? If you really want to learn how to trade or understand the basics with trading without paying someone, go to ChatGPT or Google and type in what are the minor currency pairs in the Forex market, and then write them down, okay? See, I'm giving y'all some free game today. All right, so that's the minors. Now we're going to get into the exotic currency pairs. So our exotic currency pairs consist of one major currency and a currency from a smaller, emerging, or less developed economy, such as like the Turkish lira or the South African rand. I have people who are really interested in trading USD ZAR, which is the US dollar paired with the South African rand. Okay, so that's just one example. USD ZAR, USD TRY, which is our Turkish lira paired with US dollar. You know, so those are different exotic currency pairs. Now these pairs are less liquid, have much wider spreads, meaning it costs a bit more to enter those trades, and they tend to be more volatile due to economic and political instability in the smaller countries involved. So if you want to know what are the exotic currency pairs in the Forex market, go to Google or ChatGPT or Google and type in what are the exotic currency pairs in the Forex market. Again, y'all, I told y'all, I'm not attempting to teach people how to trade forever. Okay, that's not something I desire to do. I want you to know how to fish, because at some point I'm not going to be trading anymore, or not teaching people how to trade anymore, and I'm just going to be trading in different countries, living my life with my family. I'm just being honest. So the more people I expose to trading and help them to get on their way to make money, prayerfully, you do the same thing and you pay it forward as well. Okay. So just put it out there. So that's the reason why I'm fine with giving away so much information, or at least pointing you into the right direction so you can get the information for free if that's what you want. Because at the end of the day, like I said, y'all only got a few more years of me teaching people how to trade, and then I'm going to be ghost. Not even lying. I'm going to be ghost. I'm going to be one of them people like 50 years old and I'm just like chilling out in Bora Bora somewhere, you know, out in Bali or something. Just, you know, I got my phone, I got my drink, I'm chilling out in the sun, and then I'm minding my business with my family. All right. So I'm just throwing it out there. This isn't going to be some surprise when it happens. Okay. So here's the thing, y'all. I am suggesting strongly, because that was not suggested to me, and it would have been more beneficial for me, especially as a beginner, to focus more on the major pairs first. Why? Because major pairs have high liquidity. Okay, so our major pairs, like I mentioned, your Euro USD, which is the Euro pair with the US dollar, the GBP USD pair, which is our pound pair with the US dollar, and of course, like USD JPY, which is the US dollar pair with the yen. There are more major pairs, y'all. Remember, that's part of your homework to go to Google or ChatGPT and then write that down. Okay, but these are our most traded pairs in the world, meaning they have higher liquidity, tighter spreads. Tighter spreads means less money you have to put up into the market to enter the trade. Okay, so it makes them easier and of course cheaper to trade. This is ideal for a beginner, especially for a beginner that is not really comfortable with the idea of possibly losing money. Trading and investing, you're going to lose some money. But the key is you minimizing the amount of loss. That's where a lot of people do not put enough focus and emphasis on. And I didn't in the beginning, but that's why you're gonna have me reiterating it over and over and over again, right? In my own way. And then on top of that, with our major pairs, y'all, you know, there's lower volatility. Okay, again, that word, you're hearing the word again. So if you need to Google it, please go Google it real quick. All right. But there's lower volatility because the majors generally are less volatile than our exotic pairs specifically. And then like indices, cryptocurrency, your commodities like gold, silver and oil or whatever. This makes them less risky for beginners who are still learning how to manage market fluctuations. And y'all, to be honest, when you are dealing with currency pairs that have that lower volatility, it helps you to build up your muscle and become better at managing your emotions. So it's not just about managing market fluctuations. You're now going to practice managing your emotions, because your emotions plays a very large part in whether you are successful or if you continuously fail over and over and over again in the market. Okay, I'm going to talk about emotions a lot, y'all, whether anybody wants to believe it or not. Trust me, if you are a very emotionally driven person and you make your decisions constantly, you know, like if you're angry, you're very impulsive and stuff, I'm telling you now, trading is going to be that much harder for you until you start to better manage your emotions. Okay, so that was the other part. The last part, y'all, is when it comes to why I suggest that beginners focus on trading major pairs first, is because it's easier to analyze. If you don't know what analyze means, please Google the definition. But when it comes to that, you know, major currency pairs involve stable, well-known economies. And this is what makes it easier for us to look at, you know, economic data, understand what we're seeing, and we're looking at price movement, and we understand what we're seeing. We see how they correlate. They're making sense to us. Okay, this makes it so much easier and simpler for new traders. Okay, so y'all focusing on major pairs, ultimately it allows you as a beginner or beginners just in general to trade in more predictable and less costly environments as they build their skills. So if that is you, then trust me, this is going to be more beneficial. If you are new, I tell my students this, y'all. I tell my students that trading like this, trading your major pairs is like being in elementary school. There's no reason why you as a brand new person should first be introduced to cryptocurrency when it is extremely volatile. You haven't even established what your risk tolerance is yet. You haven't established, you haven't built up your muscle to deal with the volatility. There's that word again. That means it's very important. Write it down, research it, okay? But you haven't even built up your muscle to deal with volatility. So no, you should not be jumping straight into cryptocurrency. You should not be, as a beginner, jumping straight into indices like your S&P or your SPX 500s and your NAS 100s and US 30. Like, why? Why as a beginner are you sitting here talking about I'm trading US 30? For those of you that don't know what that is, that's the equivalent to the Dow Jones in the stock market. Those things are extremely volatile. Why in the world are you as a beginner that haven't even established yourself in the Forex market trading things like that? Hence why you're losing so much money. You should get consistent with positive results with your majors first before you move on to middle school, which is like your minors and your exotics, or even I would even put together like the commodities, gold, silver, and oil. You really need to get comfortable and build up your confidence in the market with the majors first before you move on to anything else, y'all. Please, I cannot stress that enough. I know people don't like it, don't like to hear it because they want big profits. But I'm going to tell you something. With big profits comes big loss. And big profits aren't sustainable if you don't build your muscle to handle higher volatility, less liquidity, more complex market structure, okay? It's going to be hard for you to do that. Does that make sense, y'all? Like, seriously, I know it might sound like I'm like, but I need you to get it. Does that make sense? Like, if you're finding this helpful so far, as a matter of fact, hit that thumbs up on YouTube. Go ahead, like, heart on Facebook. Okay? On top of that, share this right now with somebody that you know is curious about trading, is having some issues, with trading, or, starting over. All right? Go ahead and make sure that you share with them. And of course, comment. Continue to comment, because I want to see your comments, okay? So, absolutely. Oh, thank you. Hey, welcome, Diana. Welcome. Awesome. So, yes, this shirt, if y'all can't see it, this shirt, Success Leaves Clues, is from my lovely ladies of Success Mastery out of Belgium. If you're in the Belgium area and you need a community, look, quick commercial break, y'all. If you need a community of like-minded individuals who are on the up and up, and they are really big on personal development and getting better in every way of their life, then guess what? I need you to connect with Success Mastery. They are on YouTube, they are on Facebook, on Instagram, on TikTok, all of that good stuff, okay? Go to Success Mastery and you can purchase that shirt. More than likely, Success Leaves Clues, okay? All right, so there you go. Shout out to y'all. Okay, let's wrap this up, y'all. Let's wrap this up. So now we got through that part. We're going to go into the next thing, which is how to read currency pairs. So this is very important for those of you that are beginners in the foreign exchange market. And some people, believe it or not, they have been trading for a little bit of time. It may not be that long, but have been trading for a little bit of time, maybe 6 months. I've even had people who have been trading for up to a year, didn't understand what the breakdown of the currency pairs meant. They just knew they were currency pairs. Okay. So we have what's called our base currency versus our quote currency. Write that down. Base, as in like the bottom base. Okay. And then quote, like I called the insurance company to get a quote on a price. Okay. Quote currency. So it's base currency versus quote currency. Everybody got it? Cool. Okay, so base currency, This is the first currency listed in the pair. It represents 1 unit of that currency. So base currency, again, let's say I was talking about I wanted to trade Euro USD. Well, that means that Euro is the base because it is the first currency of that currency pair, Euro USD, okay? EUR USD. Now, the quote currency is the second currency in the pair, and this shows how much of the quote currency is needed to buy 1 unit of the base currency. Y'all, if you're like, Leona, can you break that down? I wish I could, but this isn't a course, and I don't have the time. So guess what you can do? Go to Google. Go to ChatGPT. I'm giving you things to help you to start your trading journey or to give you a refresher if you took a long break from trading, okay? So quote currency. So again, with the currency pair Euro USD, remember Euro is the base, USD, which is the second currency of that pair, is the quote, okay? So let's just say hypothetically, Euro USD as a pair, current price is $1.20. This means that 1 euro is equal to $1.20 in US dollars. Okay? Everybody got that? Again, if we're looking at Euro USD, Euro is the base because it's first. USD is second. That is the quote. That means that the euro, let's say it's $1.20, okay, or 1.20. Let me just say that 1.20. That means 1 euro is equal to, in US dollars, $1.20. Okay. Hopefully that helps you. But again, please write this down. All right. Okay. Gotcha. I see the thumbs up. Cool. So pretty much what the currency pairs represents is a rising value of the pair. Okay, this means the base currency, which is our euro, is getting stronger against the quote currency, which is our US dollar. So it takes more US dollars to buy 1 euro. If you are a world traveler, you completely understand this concept because you are aware of what we know as exchange rates. That's all this is, y'all. We are just trading the exchange rates. That's what we're doing. So instead of us having to physically exchange the euro for the US dollar, we are now doing this digitally online through our computers, through our iPads, through our phones. Okay? That's just it. Now, a falling value, though, if you wanted to write this down, a falling value of the pair, Euro USD, meaning let's say it was 1.20, but it dropped down to 1.15. That means the base currency, the euro, is now weakening. It is not as strong anymore, and the US dollar is now stronger. Against the US dollar is now stronger, which is our quote. So that means it's going to take fewer US dollars to buy 1 euro. Okay. So for those of y'all that need like a little bit more detail, the value of the currency pairs just tells you how much the quote currency is needed to exchange 1 unit of that base currency. So 1 euro per dollar, okay, or $1 per yen. Got it? That's pretty much it. Now, here's the thing. I'm going to tell y'all where you can go to look at the strength in different currencies, just so that way you can see how it fluctuates, okay? And then if you want to go and type in different currency pairs because you have written them down, okay? If you want to go and Google what is the current price of Euro USD, what is the current price of GBP USD, what is the current price of USD JPY, you can do that, and now you can see with this website I'm going to give you and how that correlates to the current price, okay? And what the price fluctuations look like. So you can review the strength of the most commonly traded currencies on the currency strength meter. Google it. Put it into Google currency strength meter, and it's going to say like livecharts.co.uk or something along those lines. I wish I feel like I was really close to it being right. I know it's live charts it's either .co.uk or .uk.co, something like that. But it's going to come up live charts, Okay. But Google currency strength meter, and it's going to lead you to the website. All right. So real quick, before we move forward, who has learned something new so far? If you have learned something new so far, let me know in the comments. And then I'm going to keep it rolling, y'all. Okay. If you learned something new, drop it in the comments if you're watching live or the replay. If you have learned something new, drop it in the comments. All right. Now we're going to keep on rolling. Okay. So that we can save some time because we're already over the time. Don't forget, y'all, to hit the thumbs up on YouTube. Okay. Share if you're finding it helpful. Subscribe and also press the notification bell on YouTube if you haven't already. Okay. So let's get into it now. We got that part out the way. Let's dive into a few key concepts that every trader should know out the gate. I'm going to go through this kind of fast, y'all, but please write them down and then do your own additional research so that way you can get a better understanding. Okay. So first things first, as a beginner trading in foreign exchange market, you need to know what a PIP is. PIP. You're going to hear that a lot. You cannot make money without being able to calculate pips, or at least seeing how pips are calculated using a tool on something called TradingView. You're going to have to figure it out. Okay. So pips is very, very, very important. A pip is short for percentage in point. Okay. This is pretty much the smallest unit of price movement in the foreign exchange market for most currency pairs. Y'all, I know you're probably like, what? I don't understand. That's confusing. Okay. I want you to think of a pip like a tiny step that shows how much the price of a currency changes in the Forex market. So I want you to imagine, you're looking at how much $1 is worth compared to, let's say, the euro. Okay. If the price moves just a little bit, we call that tiny movement a pip. So if it goes up one little point, that is considered a pip. Okay. Everybody got it. Okay. So I'm not going to go into like how to calculate and the decimals and all that stuff because we don't have time, but I will tell you this: measuring price change is very significant with pips because pips are used to quantify how much a currency pair's value has changed. And this makes it easier for us as traders to assess price movements. Okay. So again, if you want to know more about how to actually calculate pips, I have a course, a really short program. It's self-paced. You can get into that, or you can Google. Okay. You can use ChatGPT to help you out, whichever one you want to do. All right. So that part is very significant when it comes to pips. And then also we use pips to, like I said, calculate our profit and loss. In Forex trading, profits and losses are often calculated in pips. So understanding pip movement helps us as traders to estimate the potential of earnings, but also losses based on how many pips, points, the market moves in our favor or against us. Y'all. So this is extremely important. If you got it, great. If you don't have it and you're like, oh my gosh, that went by so fast, rewind. Okay. And then of course, just listen again, or you can just sign up for Day Trading 101 as you do get a full day learning about pips and how to calculate them. But at the end of the day, eventually you'll get it. So please don't beat yourself up, because especially if you're just being exposed to it. Okay. So let's keep moving. Let's keep moving on to the second thing that you need to know as a trader, especially as a new trader in the foreign exchange market, and that is lot sizes. Oh my gosh. Yeah, I wish the way that I'm going to explain to you all about lot sizes, I wish that I would have used this logic earlier on. But you know what? I didn't use it earlier on. And so now I can help you out, right? So that way you don't make the same mistakes I did. Okay, so let's get into it. So a lot size in Forex trading, lot sizes refer to the amount of the currency you're trading. So the three main lot sizes are your standard, your mini, and of course micro, and they directly affect how the size of your trade and then also the level of risk. I want you all to think about lot sizes, you know, in Forex trading, like placing a bet on a game. So it's football season. So I want you to think about you're placing a bet on whoever your favorite team is, okay? Or just betting on a team. The bigger the bet, the more money you stand to win or lose. I need you to keep both in mind. This is where a lot of beginners mess up. They think about their lot size and they're like, yeah, if I had this lot size, this is how much I stand to gain. This is how much money I stand to make. But you know what a lot of beginners don't do? They don't calculate what that lot size could mean in terms of loss with the amount of pips that their stop loss, their safety net, you're going to learn about that, but their safety net is going to be. I need you to keep that in mind moving forward. When we talk about lot size, I need you to calculate what your potential loss could be first. Stop doing your gains first. I need you to do your loss first. Why, Leona? Because if you are building up your muscle to be able to manage larger loss because your account is growing, because you still got some financial trauma there, right? You're not used to seeing this size trading account or this amount of money in any account with your name on it. Then guess what? You have to get comfortable with larger losses. Don't think about the amount of money you stand to gain. Am I okay with losing $1,000? Am I okay with losing $5,000? Am I okay with losing $10,000? Start thinking about the amount you stand to lose first. That will help you to make a better decision going into the market, okay? So now I'm going to go into the different lot sizes, all right? Let's keep it moving. Let's keep moving. So number one is your standard. This is your big bet, right? So you're betting a large amount of money with this lot size, okay? Standard lot size is really big. For each point, y'all, that price moves either in your direction or in the opposite direction, you stand to win or lose $10 for each point, meaning each pip, all right? So since the bet is big, your potential winning or losses are much larger. So it's like taking $100 bet on a game. If you win, the payout is big, but if you lose, it's gonna hurt. That makes sense? So that's why I tell people, please focus on how much you stand to lose first when selecting your lot sizes. Then that will help you to make the decision if you want to continue moving forward with that lot size or if you want to lower it or if you want to increase it, whichever one, okay? So number two is our mini lot size. This is like our medium bet. So again, it's football season. All right, tomorrow you're gonna have a whole bunch of games on. Now, if you betting on college games, you're probably watching one right now. You might have one up on your screen right now, but you're listening to me, so you're bouncing back and forth between me talking about lot sizes and whoever playing right now. I don't know who's playing right now. Okay, but your mini lot is like your medium bet. This is a smaller bet. Okay, so for each pip, every point, you win or lose $1. Okay, $1. This is like a safer bet than a standard lot with smaller rewards and smaller risk. However, depending on your balance, however much you have in your broker account, you may not be able to do this either because you're not comfortable with the risk and you may be doing something called over leveraging, putting you at danger of losing all of your money. You'll learn about leverage. Again, I told you earlier to write that word down because we're going to talk about it here in a minute. Okay. So with your mini lot, it's like betting $10. You can still win or lose, but the impact is a bit more moderate. All right. Last one is your micro lot size. This is your small bet. Okay. This is for my people who start accounts with like $500. You know, if you started with $100, okay, if you started with 1,000, depending on what you're trading, you might need to stick to the micro lot too, okay? But this is a very small bet. Each pip with your micro lot is worth 10 cents. So every point that your team scores or whatever, right? In a betting position, right? You could win 10 cents for each point, or you could lose 10 cents. Okay. So your wins and your losses are much smaller. So it's like taking a $1 bet. You're, taking a small risk. I said 10, yeah. You're taking a small risk. So you don't win or lose too much. And I meant it's $1, not 10 cents. So it's 0.10. That's your lot size. So that's $1, not 10 cents, because 0.01 is 10 cents. All right. So that's your micro lot. Everybody got it? Okay. So in summary, big bets. Your standard lots mean bigger potential rewards, but also carry bigger risk. Your smaller bets, your mini and micro lots, gives you a chance to play it safer with less risk and smaller gains or losses. Okay. So hopefully this comparison helps you to see that lot sizes in Forex trading is like deciding how much risk you're willing to take with each trade. Y'all, you're less likely to throw away money in the market when you truly understand what you stand to lose first versus what you stand to gain. I'm going to say that again. Every time before you enter the market, especially for my people who have been trading for a while and you have not been consistently profitable, I need you to start looking at and calculating what your lot size stands to lose you with the amount of pips your stop loss is. This is for my people who've been trading for a while. As a beginner, I need you, when you start to calculate pips and you're establishing your lot sizes, I need you to establish your lot size in helping you to be aware of what you stand to lose first. Because again, you're less likely to throw away your money because you're like, hold on, I don't know if I'm ready for a $100 loss yet. I'm not there yet. Let me lower this lot size. I need to bring my lot size down to where I stand to lose $50. Everybody got it? Makes sense? Okay? Because we're about to move on to another tool in Forex that all beginners, okay, including me when I started, don't understand and at times misuse, which contributes to blown accounts, meaning loss of money. All right. So let's move it on. Moving on. How much time do I have, y'all? Give me 1 second. Let me see. Okay, I'm glad this is making sense to y'all. All right, cool. So, oh Lord. All right, y'all. I'm sorry. I thought it was gonna be, but listen, when I talk about trading, I get excited and then I just keep going. So we're gonna wrap it up. Okay, we're gonna wrap it up. But thank y'all for hanging in there. I appreciate y'all for hanging in there. Okay, so leverage and margin is the next thing. Remember, I said to write down leverage. I need you to write down the word margin as well. Leverage and margin go hand in hand. Okay, so leverage in Forex works like a loan from your broker. So whoever you get as a broker to help you to trade in the foreign exchange market, they allow you to use leverage. They allow you to control a much larger trade size with a smaller amount of money. So you deposit a smaller amount of money, that is going to be your margin. Okay, so think of it like getting a loan from a bank to buy a house. Okay, you only put down a portion of the entire property. That's your down payment, correct? Well, in trading, margin is like your down payment, and leverage lets you trade a bigger position than the amount you actually have. So I'm going to give you all an example. Remember, if you need to know more about leverage and margin and you're like, it kind of makes sense, but it don't make sense, write those two words down and then go to Google. Or again, like I said, y'all, use ChatGPT. You can ask ChatGPT to give you different examples of leverage and margin, okay? To whatever type of example makes more sense to you. All right. So for example, let's say you use a 10-to-1 leverage, okay? Every dollar of your money controls $10 in the market. So let's say you have $1,000 that you're putting into your broker account and you use a 10-to-1 leverage. That means that you have $10,000 in purchase power. Because again, you start with 1,000, but you're using a leverage of 10-to-1. $1 gives you 10. Every $1 gives you 10. So that means that 1,000 turns into 10,000. Now, let's say you have that same 1,000, but you use a 50-to-1 leverage. 50-to-1 leverage. That gives you $50,000 of purchase power. Okay? So again, 1,000, but for every $1 out of that 1,000, you have $50 in the market. So that's why you have 50,000 in purchase power. I'm gonna tell y'all something. Although this can increase your profits, it can also increase your losses. Well, how, Leona? Because some people are not responsible and they do something called over leverage. And this is the part that most beginners misunderstand or overlook completely. Okay? So here's the thing. I need every single one of you, whether you're new to trading or you've been trading for a while and you know you have blown some accounts, child, and you still are not consistent with profit. But guess what? I'm going to challenge you today, I'm going to challenge you today to start using leverage responsibly. Okay? Because look, just like, borrowing too much money can put you in debt, using too much leverage can lead to bigger losses if the market moves against you. This is why I need you all to make sure that you understand how to calculate pips, how you are utilizing lot sizes properly as well, and calculating what you stand to lose first. This is all going to be part of your risk management plan. Pips, lot size, leverage, and margin is going to be part of your risk management plan, okay? And on top of that, y'all, when using your leverage responsibly, now you can minimize that potential of large losses, okay? Because if you're not careful, you can lose more than your initial margin, just like defaulting on the loan. And we don't want that. Okay, so as a beginner or a person that has not seen consistent profit, I need you to start over. If you have been trading for a while and you are not consistently profitable, I need you to start over, and I need you to start with a lower leverage. So if you have been using 500, if you have been using 200 to 1, I've seen one, I didn't even know that it was possible. They had 1,001. Why? If you're using anything higher than 100 to 1 in leverage, I need you to start a new account. Okay? I need you to start a new account. You should not have a leverage higher than 100 to 1. Everybody got that? If you are guilty, you ain't got to say, Leona, I'm guilty. You ain't got to admit it, okay, to me. But I need you to make sure that you readjust and start a new account, okay? And your leverage should not be higher than 100 to 1. This way you avoid risking too much money, and you can gradually build experience, y'all. Using leverage responsibly helps to protect your account from significant losses. I cannot say it enough. And I'm going to tell you something. For my people that are in the U.S., our regulated brokers only allow a maximum of 50 to 1 leverage anyway. And that's because the restrictions that were set up by the CFTC. Again, that's Commodities Futures Trading Commission. I got it this time. It took me a minute earlier today. I was like, but anyway, so yeah. So the CFTC controls that here in the United States. So our max leverage with our regulated brokers, if you want to know what that means, Google regulated versus unregulated. That is going to be key for you as a beginner. I'm telling y'all now, straight up, I will not suggest any new person trading to use an unregulated account. I need y'all to use a regulated account. Again, I'm not a financial advisor, so I can't tell you what you better do, but I can only suggest that you do it, because with an unregulated broker account, more than like there is a potential for you to lose your money and they do some shady business, and then you're sitting here like, I have no protection because you're using an unregulated broker. Okay. So please, y'all, make sure that you start to research Forex brokers too, to practice trading. And when you do that, make sure that you select 50 or the max 100 to 1 in leverage. And that's all going to depend on your broker, okay, and their options. But no one as a beginner, or if you have not been consistently successful with profiting from this market, should be using a leverage higher than 100 to 1. Okay? So quick check on learning. Real quick. Y'all ready? Y'all still with me? Quick check on learning. Then we're going to roll on. Okay? If you are a U.S. citizen, what is the maximum leverage in Forex according to the CFTC? What is that number? If you're a U.S. citizen, what is the maximum leverage in Forex according to the CFTC? I need y'all to type it. Come on, hurry up, real quick. Type it. What is it? What's the maximum leverage? What's the maximum leverage? Y'all ain't ready. Okay, I'm gonna keep it moving. Say high probability trades, maybe a higher lot. Save that question. Please come back to that for Q&A. Please come back to that for Q&A because I got an answer for that. But y'all still ain't gave me an answer. That means y'all ain't got it. Okay, so again, the maximum leverage for U.S. citizens with regulated brokers, according to the CFTC, is 50 to 1, y'all. If you're going to an unregulated broker, clearly they have higher lot sizes. But as a beginner, and also if you have not been consistently profitable with Forex trading, your leverage should not be higher than 100 to 1. Got it? Okay, so for the next 10 minutes, y'all, we're going to wrap this up. We're going to be talking about balancing life while you're learning the skill, okay? Trust me, planning to learn will help you to stay on track and not take a very long extended break from it. The longer the break, the less likely you are to remember this information, and the higher chances you're going to have to just start all over again, okay? So if you're that person that took a long break and you're like, I really want to get back to it, just get back to it, but don't stop, okay? Get back to it and don't stop. Trust me, been there, done that. This is why I'm sharing the stuff that I'm sharing today, all right? So let's get into it. We want to identify some time constraints. And of course, we want to talk about how we can balance everything with our day-to-day life. So we're going to assess our available time, y'all. Here's what we're going to do. We need to make sure that we're understanding our personal schedule. We're understanding that, time constraints is really crucial when we're learning about the Forex market, especially if you're a busy person like myself, because it just helps you to create a realistic and sustainable study and trading routine. Now, by knowing how much time you can consistently dedicate, you can prioritize like learning key concepts and of course avoid burnout, y'all. So how many of you in learning this skill or just doing something in general, like you're learning something new, you've experienced burnout? How many of you have experienced burnout before? Let me come back to it. Let's see. Okay. Well, we're going to keep it rolling, y'all, because I really wanted to, but I don't know if it's a delay on my end, but it's like the comments are coming through kind of slow. I'm seeing them come in the chat, but they're coming through kind of slow. So listen, I'm telling y'all from personal experience, I've been there, done that, and that's the reason why I want to share this with you. And on top of that, y'all, it also helps us to set achievable goals, because so many people come into Forex trade and they're like, man, I'm going to do this and I'm going to do that. I did it, been there, done that. Okay. We need to set achievable goals, because this is going to ensure that we make steady progress without sacrificing our work, without sacrificing our family or our personal time, that self-care that we talk about, right? Okay. We want to make sure that we exercise efficient time management, because this allows us as individuals to focus on quality over quantity and maximizing, our learning in the limited time that we have. Y'all, I have a whole 4-year-old. I got a husband who's about to retire. I have a business I'm running. Plus, I have other things where I'm helping people, volunteering, all kind of stuff. Y'all, listen, we don't have that much time in the Clark household. So this is why scheduling and looking at everything is very, very important, okay? I want you to consider your daily work commitments. I want you to consider like your family time and of course your personal activities. Okay? Think about those things. What would your day look like if you add 1 hour per day of learning this skill? Can you honestly swing 1 hour a day? That could be 3 days a week. That could be 4 days a week. That could be 5 days a week, 7 days a week. That's totally up to you. But 1 hour per day, could you swing it? Or would you have to take it down to like, let's say 30 minutes? I need you to be realistic though. Okay? What can you really do? And this leads me into setting realistic learning goals. All right, I'm moving forward, y'all, because of time. I've been on here for almost an hour and a half. So, but setting those realistic learning goals, I'm going to recommend for every single person here to start small. You know, start with small, achievable daily goals like studying or trading for 1 hour. Or if you're like, Leon, I can't do 1 hour. I can do 30 minutes though. Okay, with 30 minutes. And then I need you to establish how many days per week. Okay? If your schedule is a bit lighter on Mondays, Wednesdays, and Fridays, or Tuesdays, Thursdays, and Saturdays, then guess what? Do whatever it is, but make sure you put those days of the week down as well. Not just I'm doing 30 minutes a day or I'm doing 1 hour per day. No, how many days per week are you doing it? Look at your schedule and see which days you have a bit more room. Now you can add that 1 hour or that 30 minutes. Okay, because whatever you can do, I need you to do that without adding additional stress or feeling overwhelmed. You don't need that. You want to make this as easy as possible and flow with what you have going on right now. Okay, because and on top of this, y'all, when it comes to setting these realistic learning goals, y'all, at the end of the day, consistency is going to be way more important than spending long hours learning. You don't need to make up because whatever. No, you got to get in the habit of being consistent, because how consistent you are with studying is going to reflect in your consistency with trading. Catch that piece. Okay? Small, regular efforts lead to better results over time. Again, take it for someone who has been there, done that. All right. I'm not telling y'all something that I read, somebody else said. I'm telling you what I know from personal experience. Please take small steps. Okay. Last thing with this part, and that is to tailor a schedule that works for you. So let's say you only have like early mornings, okay, free for studying or trading. Then you will incorporate that time into your schedule. So if right now your day starts at 6 a.m. to get the kids ready for school, to get yourself ready for work or whatever your day looks like, then you may want to consider waking up at 5 a.m. instead. That could be 5 a.m. Monday to Friday. That could be 5 a.m. Monday, Wednesday, Friday. That could be 5 a.m. Tuesday, Thursday, Saturday. That could be 5 a.m. Tuesday, Thursday. I don't care. Switch the time. Get up an hour earlier or 30 minutes earlier, whichever one you're going to be doing. If it's an hour per day, 30 minutes per day, whichever one. Get up that amount of time earlier on the days that you designate, because you have reviewed your schedule and you have noticed these are my lighter days, and I can now add one more thing into that day. Okay? Whichever one would not dramatically disrupt your current flow, that's what you need to roll with. If it makes sense, let me know it makes sense. Okay? I'm telling you, this is one of the things that I hear so much. People are talking about, I don't have the time. I don't get it. Like, I mean, life. Everybody got life going on. It's not an excuse. All of us have 24 hours in a day. It's not an excuse. You need to figure it out. This is going to help you to figure it out. Okay? On top of that, with tailoring that schedule, right? Make sure you use the tools and resources that you have available to you. If you need to use Google Calendar, use Google Calendar. If you need to use the calendar reminders on your iPhone, if you have an iPhone, use the calendar reminders on your iPhone. If you need to use just like a simple planner or something, use the simple planner. Especially if you carry it around with you every single day anyway. Use a planner, put the stuff in, okay? You can even, listen, something that has helped me with accomplishing my tasks on a daily basis is I started putting in my notes app on my iPhone, I started putting my tasks for each day, things that I know that I do every Sunday, every Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, right? And I created a checklist because there's a button on there where you can press it and it'll make it a checklist. So once you complete that task, you just press the button and it'll check it out for you, okay? I did that on my iPhone. And y'all, when I say that has helped me to become so much more productive every day, I mean, total game changer. And it's something simple as just writing my tasks for each day of the week on one notepad and then creating the little thing, pressing the button so it make a checklist. And now every day, like today, I'm going to go in because I said that I was going to go live today. I could press that button, it could check it out for me. Now I have done what I said I was going to do for Saturday, right? Okay, so if that has helped you, please let me know. Say, yep, this is helping. I'm with you, Leona. It's helping. I'm with you, Leona. If it is helping you and you are finding extreme value with this live stream right now, whether you're watching live or the replay, hit that share button, y'all. Sharing is caring. Don't forget to comment. Don't forget to hit the thumbs up if you're on YouTube. If you're on Facebook, you can hit the like or the heart, and also comment. Let it be known what you are learning and if you are learning just in general. Okay, if something is helping you, you can be specific about what is helping you. All right. So last part, y'all, before we get into homework. Last part, we're going to talk about some time management tips for you as a Forex trader, whether you are beginning or you kind of set it down and you're struggling with getting back on track because life is life right now. All right. We want to consider breaking down Forex learning into manageable chunks. So let's say you're going to dedicate 1 hour per day, 4 days a week. Okay, cool. Whatever those days of the week are, you're going to establish this by putting it in your planner, put it on Google Calendar, whatever you're going to use. 20 minutes is going to be for, let's say, reviewing some of the basics. So like, remember how I gave y'all some things to look up the definition, go on to Google or ChatGPT? That could be 20 minutes of doing that, okay? 20 minutes could be of watching a tutorial on how to calculate pips, a tutorial on how to calculate what your dollar amount may be in profit or loss with using your lot size, with the amount of pips you're looking for your profit and stop loss, right? You can use 20 minutes of that. And then you could do 20 minutes of practicing. So that could be 20 minutes of charting, which is something you'll learn about later. But 20 minutes of charting. So that means you're going either to your broker trading platform or using TraderView because that's universal. Everybody uses TraderView. That's a trader and investor for the most part. You can do 20 minutes of charting, okay? And then, of course, you know, you could do 20 minutes of whatever else. But this is for like a person that can contribute 1 hour per day. If it's 30 minutes, then you need to break it down in a different way where you're maximizing that 30 minutes that you have for the day, okay? Listen, guys, you start learning, it's imperative that you as a beginner, and even if you've traded for a while, but you haven't been consistently profitable, you need to go back to a demo account, dog. I know you're like, I don't want to do that. Stop putting your money into these live broker accounts and losing your money. Get a demo account. Get a demo account, okay? Everybody that is just starting out should always start with the demo account, especially in the Forex market. Now, I can't speak for stocks because I know there's some people that's against that in the stock market. You do what you want to do, but I'm going to tell you something. There are benefits to starting with a demo account, okay? There are benefits. Some of you that have been trading for a while, you know them. Those of you that have not been trading and you're new and this is your first time tuning in, guess what? I'm going to let you know some of the benefits of a demo account. We ready? Okay? So number one is risk-free practicing, okay? A demo account allows every single beginner to trade with virtual money. It gives you a safe environment to practice without risking your hard-earned money. This is why it's imperative for you to start with a demo account as a newbie, okay? Then on top of that, number two, you get to learn platform basics. So you're learning about the trading platform. Every Forex broker does not use the same trading platform. I had a broker for 4.5 years. They just switched over last year to trade locker. I had been with MetaTrader for the entire time I've been trading. And now last year, 2023, I had to learn a whole different trading platform. And because it's new, they're working out the kinks. So it's like, okay, I got it. I just got to learn it because I'm familiar with them. I've never had any issues with withdrawing my money. You know what I'm saying? Like, I don't want to change who I'm with because they switch trading platforms, right? Now, I'm still using some other people, but still, I'm just using that as an example, okay? So a demo account helps you to get familiar with the trading platform, okay? You get to get familiar with what tools they use or have available and how to use them to mark up your charts. You get to learn how fast or slow they execute your orders to enter the trade and how to get out, how to modify your trades, right? It also reduces the chances of you making really big, costly mistakes in a live trading account because you're not familiar with that trading platform. If that makes sense, let me know that it makes sense. If that makes sense, let me know that it makes sense. Okay? Now, there's another thing, y'all. You get to test strategies in a demo account. Beginners can test and refine their trading strategies in real market conditions without financial consequences. How is that possible, Leona? Well, your demo and your live accounts use the same algorithm. The only difference is the demo account does not require you to put your hard-earned money into it, and it gives you virtual money. The live account requires you to put your hard-earned money into that account. That's the only difference. Algorithm is the same. It moves the same. Systems, the tools are the same. All of that is the same with the demo and the live account in the Forex market. Okay. And then last thing, y'all, you get to develop your confidence. Trading in a demo account helps build confidence and experience before transitioning to live trading. This is where you can work through those emotions like fear, like greed, like revenge trading, all of that stuff. You can work through all of those things so it does not negatively impact your trading when you go live. Okay, so overall, this is a crucial step in gaining the skills and discipline needed for successful live trading. Okay. So with that being said, y'all, I just really want y'all to just think about another thing, which is, staying away from distractions, y'all, when you're learning. When you say that you're going to learn for that hour, tell your family, put your phone down, all of that stuff. Every distraction, let it go. Okay. I need you to focus solely on studying. If it's an hour, if it's 30 minutes, that is your time to do that. If you need to step out of the house and go into the car or go to your favorite spot, go to Starbucks and sit outside, whatever you need to do that, but make sure that you are not wasting time doing other things that are not going to help you to learn this skill and ultimately start to make money or supplement your income, okay? And then also, I need you to leverage your free time by, using those little small pockets of time that you have. So like, let's say you have lunch breaks and you have long lunch breaks. Well, if it only take you 20 minutes to eat your food, even when you taking your time, right? And you have an hour, then guess what? That other 40 minutes, now you can use that instead of when you're at home with your family, you can use that 40 minutes, break it down into 20-minute increments. 20 minutes focus on a break basis, 20 minutes focus on trading, whatever it is, okay? You can also listen to podcasts pertaining to trading, investing. You can also watch Forex related videos during that lunch break. You can listen to those podcasts while you're driving, especially if you have a long commute to work and from home or back to home. You can be listening to those things. You can listen to these replays while you are driving to work and back from work and so on and so forth. Okay. All right. So those are just a few tips to help you with managing your time. So that way you can learn more, you can get better, and you can get those results faster. Okay. But you can be consistent because you're not getting the schedule and all those good things. All right. So homework assignment. If y'all ready for the homework, let me know. Type homework, homework, homework. Type homework in the chat right now. Type homework in the comments if you're watching the replay. If you are ready for the homework, let me know by typing homework in the chat or in the comments if you're watching the replay. And before I give you the homework, y'all, please, if this has helped you in any way, shape, or form, give this YouTube channel, this particular video, a thumbs up. Also share, because sharing is caring. Okay. And then continue to comment, y'all. I appreciate y'all comments. All right. Okay, so homework. Let's get it. First things first, I want you to create a personalized weekly schedule. Remember what I told you. You could either use a planner, Google Calendar, whatever. You could do what I did. Open up the notepad on your iPhone, and then create a checklist for each day of the week. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. And there's a button at the bottom of that screen when you open up your notepad. There's a button that has like three little dots. You press on that and it will create a checklist underneath, say Sunday. Boom. Now you can type the task, and then when you hit enter, the next little circle will come up and you type the task, and that's creating your checklist. Okay. You can do that. Okay. But I need you to develop a weekly schedule that integrates 1 hour, or if you can only do 30 minutes per day of learning Forex. Use the time management tips that I just shared a few seconds ago, okay? And then on top of that, I need you to start choosing the best times in your schedule to commit to learning and practicing consistently, because consistency is going to outweigh doing long periods of studying, okay? Be consistent with that. And on top of that, to add to this weekly schedule, y'all, I need you to purchase a notebook, because you're going to create a trading plan. Your trading plan should be written in your handwriting. I got it. We want to use, technology and stuff, but I'm going to tell y'all something. It's something about seeing what you wrote to yourself, putting the date. And when you do this, y'all, if I were you to kind of make it like a contract to yourself to stick to your plan, sign and date it. Sign and date it. So I want you to purchase a notebook and annotate your schedule in there as well, because this is going to be part of your trading plan, okay? That's number one. That's first part of your homework. Second part of your homework is I want you to reflect on your risk tolerance, because we kind of touched on risk management here, but I need you to think about how much risk are you naturally inclined to take? Like, seriously, consider your overall comfort with risk. And most importantly, y'all, I need you to determine the amount of money you are genuinely willing to risk in a single day without it affecting your emotions or disrupting your daily life. Everybody got that? This number should be manageable and not cause stress, y'all. Again, I need you to consider that number. What is that number? I'm okay with losing $25. I'm okay with losing $1,000. I'm okay with losing $10,000 a day. That all depends on, of course, how much money you're going to put into your broker account. But what are you okay with losing on any given day on any single trade? Okay. Again, this number should be very manageable. You shouldn't be like, having heart palpitations and stuff like that. You shouldn't be feeling any of that. Okay. Now I'm going to tell y'all something, because I've had some people say, if your answer is 0, I'm going to be the bearer of bad news. Trading ain't for you, and investing sure enough ain't for you. Why? Yeah, I said it. Trading is not for you, and investing is not for you. Here's why. You should not expect to grow your money in any capacity if you're not willing to risk any money. This is real talk, y'all. We got to be more realistic about our expectations, especially when we're thinking about multiplying our money by leveraging these financial markets, whether that's the stock market, whether that's the real estate market, whether that's, through precious metals and stuff. I don't care. However you're expecting to multiply your money, you cannot make money without risking money, meaning there's a potential for you to not make money off of that investment. Every market poses a risk of loss, y'all. However, I'm going to keep saying this. The amount of loss is completely on you, not anyone else. This is another thing about trading that exposes people. It's personal responsibility. It's time. You got to take personal responsibility. It's not on anybody else. Hate to be the bearer of bad news. You can't point the finger at your mama because you lost $10,000 trading. Your mama didn't make you trade. Your mama didn't press the button for you. You decided to do that. Okay? So if your answer is 0, then don't watch anything else pertaining to trading. Don't even think about investing in anything because everything that you invest in poses a risk of loss. There it is. But this is why I really want you to write down your number. Okay? You need to know what your number is. And over time, that number will change because you get more comfortable with the risk because you are multiplying your money and you're seeing your balance grow. Your accounts are growing. Okay? So what is your number? Okay, what is your number that you're comfortable losing on any given day? Is it $25? Is it $50? Is it $100? Is it $1,000? Whatever it is, I need you to write it down in that notebook that you're about to purchase, okay? Because that's going to be part of your trading plan and also part of your risk management plan, okay? So there we go. We are good. All right, so everyone should have their homework assignment. And I need you all to willingly work on this over the upcoming week. Why? Because we're going to have a part 2 next week. All right. I want you to be ready to engage in part 2 because you stay true to your word. You know what I'm saying? And you finish that work that you started today. You finish what you started today. Okay. Because next week, we're going to jump into part 2 of this series. To help you as a beginner or the person just coming back in because you took a break or you're not seeing consistent profit. But I want you to understand Forex concepts and, of course, the basics while also managing your risk properly because part 2, we're going to cover technical analysis, okay? Technical analysis. We're going to talk about these different tools that you can use like support and resistance and trend lines and different types of indicators. You may have heard people say moving averages and whatnot. You're going to be able to understand those terms, what they look like, because I will be sharing my screen. Okay. And then we're going to talk about risk management. This is huge to me, risk management, because this was something that contributed to me losing money because I didn't understand risk management. All right. So we're going to talk about how to set up our stop loss and take profit points, okay, to manage our risk effectively. That's going to include lot size and pips, okay? And also the importance of position sizing to protect your account while you're trading. All right, and then, of course, we're going to talk about some more things pertaining to risk management so that way you can develop your own personal risk management plan. Because at the end of the day, y'all, when you are applying these concepts, you're going to be able to maximize your risk, okay? Or control your risk, my bad. You're going to be able to control your risk and then, of course, maximize your analysis. And even if you only have like 1 hour a day or 30 minutes, okay, to dedicate to Forex trading, everything is going to work out for you, okay? Remember, y'all, this series was created for those of you who are busy. You know, you have busy schedules like myself. You have family commitments. You're limited on your time that you have to study and whatnot. I'm going to make sure to give you everything I got, okay, within this series. All right, so if you're going to tune in to part 2, I need you to drop a number 2. Drop a number 2. Drop a number 2 in the comment section. If you're watching live, drop a number 2. If you're watching a replay, drop a number 2 to let me know you're going to be tuning in next week to this series, to part 2. Okay, so I have a few minutes for questions. I know I have been on here. I got 5 minutes, y'all, actually. 5 minutes, because that would mean I have been on here for, yeah, I don't want to be on here 2 hours. So 5 minutes for questions. So let me go back. Goddess QTM, I want to understand your question. When you said high probability trades, maybe a higher lot size. I'm assuming this is what you mean. So if you see there's a potential for you to win the trade, you increase your lot size. If that's what you're saying, I'm going to give you an answer, and that is still no. Here's why. because in me learning and understanding trading psychology, listening to Trading in the Zone by Mark Douglas, I have learned that there is no guarantee, no matter what our strategy tells us, no matter how many confluences we may have, there is no guarantee that the market is going to play out how we see it. So I personally do not want to put stock into changing my plans just because I expect a payout from this trade. I want to move the way I've been moving, and I'm following this process like I have a Forex growth chart. So that tells me if my account balance is $5,000 and I'm, risking 60 pips or something, then it's going to calculate what my lot size should be for that 60 pip take profit. Well, I'm going to turn around and calculate, well, if I'm risking 30 pips to gain that 60, what is going to be my potential loss? If that loss is more than what my heart can handle, I'm going to lower that lot size. I never, ever suggest to anyone just increasing their lot size just because. Remember what I said, y'all. Please make sure that when you are considering entering the market, calculate your potential loss first with your lot size, and then make sure that you can handle that. Then that's going to determine how much you calculate, how much you stand to gain in the market with the amount of pips that your take profit point may be. Okay, so hopefully that helps you. I'm not telling you you're wrong, but I'm telling you from personal experience, when you do those things, you create a habit of not being consistent with following through on what you intend to do. And that's not a good thing. That part is not a good thing. We don't want to create a habit of just switching up. We want consistency in the market. That's how you get consistent results. Those consistent results can be either good or they could be, hey, I need to make some adjustments. But at least you'll know why you need to make the adjustments, because you're consistent with doing X, Y, and Z every single time before you enter the market. Okay. I had another question too, is how do I find the right Forex broker for me? This is something that I tell people, there's a lot of things that you can do to find a right broker. Number one is start with Google. You know what I'm saying? Read reviews, y'all. Look at if the broker, aligns with your risk tolerance, as in, being a regulated or unregulated broker, like what's their leverage? What kind of reviews do they have about allowing people to withdraw? Like, do they hold on to their withdrawals and whatnot? Can you find information on the CEO? I'm gonna tell you guys something. That should be the first thing you should do. Real talk. You hear about these different brokers, or somebody say, oh, you should get Forex.com. Okay, well, Google who is the CEO for Forex.com. Read up on them. How many businesses have they had that have failed? Are they included in any type of scandals? All of that stuff. Like, seriously, y'all, Google them. If you are looking to get to use a broker that you can't find any information on their CEO, I'm telling you right now, that's one huge red flag. Run away. Run the heck away. Fast. Run away. Okay? I'm not playing, y'all. Run away. But look at that CEO information. Okay? Make sure that it's on the internet. You can look into them and whatnot. If there's no information on them, don't use that broker. Straight up. Just let it go. Okay? Read the reviews most definitely, because that's going to help you. Listen, if you mess with people money, they're going to tell the truth. Now, I will say this. When it comes to Forex just in general, there are a lot of people who don't properly utilize their brokers and don't understand Forex, so they have bad experiences, and so that may play a factor in it. So not to say every review is credible. There are going to be some where you're like, you know what I'm saying? So it's going to be up to you. Go with your gut, most definitely, but I will tell you, number one, CEO. That will help you make that decision. Okay. And of course, like leverage, spread, like how much it costs to get into a trade. What do they allow you to trade? Is that something that you want to trade? There's Forex.com. They stopped allowing us to trade gold. So guess what? I'm like, I can't trade gold with Forex.com anymore. You know what I'm saying? Owanda never allowed, well, at least when I was looking at it, Owanda didn't allow you to trade gold. So I never, got Owanda because I'm like, I trade gold. Like, why I want to use you, So yeah, so that's it. So those two, I had more questions, but because of time, it's almost 2 hours in. I got to let this go, y'all. So I appreciate it. Thank you all so very much for tuning in and asking questions, and of course sending questions, asking me questions beforehand. I appreciate it. I know I didn't get to every question that I received so far, but I'll get to it. Okay. Last thing, y'all, we're gonna just do a quick summary. Remember, we talked about some of the Forex basics today. Okay, we covered currency pairs. What are they? How they're broken down. We talked about pips. We talked about lot size. We talked about leverage and margin, and then also went into a few time management strategies. Okay, how to help you balance work, family, and learning time, scheduling, and of course, the importance of consistency over long study hours. Okay. So that wraps up part 1 of our series, the Forex Success Blueprint, Trade Smarter in 2025. If you want to jumpstart your trading education today with me, because you are rocking with my teaching style and it's all making sense, of course, you can start with the self-paced day trading 101 program. You'll receive a new trading lesson every 30 days, every day for 30 days, not every 30 days. You'll receive a new trading lesson every day for 30 days. This means that, you can build your trading foundation while learning how I trade in 30 days or however long it takes you to complete the program, okay? You'll also receive reading material. You'll receive a trading journal that will help you with the course, but also helping you to create your own trading plan for this year and the next year or years to come, okay? You can click the link in the description of this video and purchase the Day Trading 101 program for $99 today. Heads up, this price is going to increase next year after it has been updated because I am working on updates to give more value in that program. So this means to this day, you're going to save some money before going into the new year in preparation to add additional income, right? Add an additional income source via trading in the next year, should you follow the guidance provided, okay? So with that being said, I want to remind y'all, listen, with trading comes higher risk of loss. Of course, that's due to various market conditions and economic events, and that's combined with your level of emotional intelligence and risk management plan, among other things, okay? I am not advising you to trade in the Forex market or the cryptocurrency market. I am only sharing strategies and information that has helped me on my trading journey. Remember, y'all, past profits do not guarantee any viewer, any person, any trader that they're going to make money or a certain amount of money, because each one of us learns and performs differently, okay? We can get the same information and we can all get a different thing from that information. So that is why it is suggested that you all consider every single risk before deciding to enter the market, and only invest money into the market that will not impact your lifestyle. Got it? Good. So if you accept the risk that comes with trading in the Forex market and are ready to learn today before the new year at a lower cost, I need you to go right now, click the link in the description of this video right now and get started today. Okay, we are officially done with part 1 of this series. Next week, I will be live on Thursday, October 17th at 1 p.m. Eastern Standard Time, 12 p.m. Central, and that is 10 a.m. Pacific for my West Coast people, because I won't be available over the weekend. So set your reminders now. Okay, set your reminders now. And of course, hit that notification bell so that you can meet me on YouTube next week. Okay, so that's it, y'all. Remember what Arthur Ashe told us: to start where you are, use what you have, and do what you can. Let's go make it a great day. Let's go make it a great weekend. And I will see y'all next week.